Hi, folks. Gettess here with the market sense for the week of February 4th, 2014. As always, the charts in the presentation come from the Trade Navigator software. And first chart of the weekly bond market chart here, and you can see virtually for the entire year, bonds have just turned up and are continuing up. They've probably hit a rather critical juncture here in that they've reached this resistance up here, which was about 134.20, and they did so while taking out the previous swing high here, so it wouldn't be surprising to see a little back off from in here. The upper Keltner band is up about the mid 135 area, 135.16, 17, somewhere in there. So they could certainly go that high, but it wouldn't surprise me to see them turn back down a bit from here. Heck, the upper moving average is 132.28, and they've stayed well above that. And they could certainly go down there, or even to 132.04, and wouldn't be shocking at all. But actually, over the next couple of weeks, it wouldn't be surprising to see them turn back down and try to find some support before trying another leg up, assuming they're going to. Obviously, this looks pretty good to me. I mean, this lower or higher double bottom here above the old lows actually is a pretty bullish setup and could send them quite a bit higher. But I'm not a long-term guy. I don't want to think that far ahead. I'd like to see them turn back down, monitor how they turn back down, and see if there's a good buying opportunity coming. Stocks have sort of the opposite situation. We've seen weakness for the first time in, well, certainly the length of this chart. You can see they've broken through the mid-Keltner channel by more than they have at any time in the last year and a half. And they've broken most of the support this week. We're probably looking at 1760 and the previous swing low at 1754, that area being really critical, and they seem to be trading below that. They're probably going to turn up from somewhere. Now, they could go all the way to the lower Keltner band here, which is about 1690 at this point, certainly below 1700. But they may not make it that far. As you can see, it's been a long time since they've been below the mid-Keltner, so they could turn back up. But again, as sort of the inverse in bonds, the real interesting thing here will be if they turn back up from someplace in here, to monitor them to see if we can figure out where the best resistance comes in, because I think the next selling opportunity will probably be pretty good. I know there's a lot of people looking for this market to go right back to new highs once it turns back up, and I'm certainly not going to tell you they're wrong. But I'm kind of looking to see if there isn't going to be a really good sell coming once they turn back up. So I'm sure they will. Don't know from exactly where they'll turn back up, but I'm looking for them to turn back up, see if we can find them up and hit resistance in here and stall, and then I'd kind of like to jump on them with both feet. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we think.